We're 2.5 hours into trading on Wednesday, February 2nd. Hello, traders. I'm going to start all my videos off with a longer term perspective of the market. Then I'm going to go into a shorter term perspective of the market. Then we'll start taking a look at the stocks. And yes, of course, I'm going to review my previous pick of the day. I'm going to have some brief pauses in between so that it's easier for me to edit those videos out. And then I'm going to separate them so that you can watch my longer market comments day to day to day, and you'll be able to see how that analysis plays out over time. The same thing with the shorter term market analysis. It's just a change so that I can break my videos into smaller components. Right now we've got nice support here, horizontal support, SPY 430. We've been bouncing off of it. We were leaning on these tails under body, showing us strength every time that they tried to knock the market down. Buyers, 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 buyers. That's what results in these tails here. You can see Friday we had a beautiful close right on the high of the day. Massive volume coming in Friday. We were already long on Friday as the day was unfolding. I told you this looks really, really good. Buyers have been waiting for a sign. Now they have that sign. They are going to get really aggressive. Let's put up the major moving averages to see where they come into play. 200-day, 100-day, 50-day. I use those on a daily chart. I do not use those on a 5-minute chart. If you see them on my 5-minute chart, it's simply because I'm flipping and I don't want to keep putting them up and taking them off. So we are resting against that 100-day moving average. That is providing resistance today. If you came in this morning and you looked at the overnight news and you went, holy cow, the market is up huge. We are going to run right out of the gate today. It's going to be go, go, gangbusters. You need to know where those major moving averages come into play. In fact, we had the same situation on QQQ, but there we were testing the 200-day moving average and breaking through it. And you can see how everything looked beautiful. And now we're drifting back down and testing that support level. Was resistance, now support. So QQQ tech stocks are finally starting to get a bit of a bid. Big news from Google yesterday. We've got Facebook after the close today. We've got Amazon tomorrow. AMD also posted a great number yesterday. Microsoft has rallied after their number last week. Apple rallied last week. So we've got a couple of days here when tech stocks should still provide a really decent bid for the overall market. And technically, you can see how things are looking good for the SPY. We're going to probably spend a day or two testing that 100-day moving average, that resistance. We'd love to close above it because if we do, then we're probably going to get up to that 50-day moving average. It would be foolish to think that heavy selling pressure like this is just going to disappear. So we're likely to come up, start to stall out, and then have a couple of aftershocks to test for support, forming a higher low double bottom. That's how things look right now on a longer term basis for the S&P 500. So let's drill down. Let's take a look at the 5-minute chart. Here we can see how the price action today has been very, very choppy. In fact, you can see yesterday, most of the day, we compressed. The one thing about trading S&P futures is it's very important for traders to know when the environment is right for trading and when it's not right for trading. Everybody wants to trade the S&P 500. My God, it's like crack. I call it crack because you got extreme leverage, you have extremely tight bid-ask spreads, so there's very little slippage. You can get in and out with ease. Unfortunately, it's not as good a trading vehicle as individual stocks. And I tell you that every day. We trade relative strength. That's where we find our edge. If you are hell-bent on trading S&P 500 futures, then you dang well better know what types of markets are set up well for intraday trading. You get an inside day, you're stuck inside the first hour range, you got lots of mixed candles like this, no bueno. Could you be a scalper? Even that is very tough. I'm not a scalper. Yes, you could. Not my style. I need momentum. I need volume. I need breakouts. Those are the things that I look for. When you get into a dead spot like this, if you look at even a stock There is not one single indicator that is going to give you a good signal when you are compressing like this. What do I see happening today? Well, we had this nice open today. I'd mentioned the 100-day moving average on the S&P 500. It provided resistance. So for those people who came in this morning, gangbusters, like, oh my God, I missed the boat. I got to buy some now. You're not so happy right now because the market has continued to pull back. Stocks that look super, super good on the open are not looking so good right now. And you wish that you would have waited a little bit because you'd have an opportunity to buy them cheaper. We had a bearish 10p cross going into the day yesterday. You can see how early today, hey, let's see what happens with this bearish cycle. Well, good thing we waited. Oh, wait a minute. Here's a nice bullish cross right in here. Ooh, sweet. We almost filled in the gap. Yeah. We could find some support here. Wait, see what this bullish cycle produces. If you did that, you're like, yeah, I'm glad I didn't really buy into that bullish cross. Waited. Now we're starting to drift lower. We've got information. You can see visually that downward sloping trend line. So let me set up an alert to help you see it a little bit better. I'm going to click there and I'm going to click there. There's your line right there. On the downside, you can also see we've got a downward sloping trend line right here. This is a trading channel. This trading channel is likely to persist for a while. Not a lot going on. Mixed candles, overlapping candles, get a little pullback, boop, right back, little pullback. Nothing going on in here. The way that these downward sloping channels are typically resolved is that you will get finally a selling climax with a long red candle or two, and then you'll get a bullish hammer or a bullish engulf. So once we get through the low end of that trading channel, watch for that pattern and an instant jump back up. That will tell you that we finally have the support that we need to start buying some stocks. Until then, you just have to be patient and you have to wait. So if you came in this morning all anxious to buy stocks that are flying higher, your best play was to just patiently wait to see what happens. We already had a nice run. So that's your short-term market analysis. Again, just as a recap, I'm looking for the lower end of this downward sloping trend line to be breached with a long red candle or two, and for us to bounce back into that downward sloping trading channel, get back up above yesterday's close, and then we've got a decent chance to attack that downward sloping trend line. We know that on a longer term basis, we like the market, but that the 100-day moving average is sitting right there at the high of the day. Very likely that we're not able to get through it today. Maybe Facebook will provide that impetus. Maybe Amazon will provide that impetus. We've got a lot of earnings coming out this week. In general, they have been excellent. So that is providing us with a nice tailwind. All right, so now we know that our market bias is we want to wait patiently for the market to show us that selling climax, and then we're going to start buying stocks because we like the market on a long-term basis, and we feel that that's going to give us a good entry point on a short-term basis. So what do we do while we wait? Well, we don't sit here twiddling our thumbs. We start looking for stocks. Let me start off with yesterday's pick, Netflix. Ooh, nasty Pete. That wasn't such a good pick after all, was it? Hell yes, it was a good pick. This is where the video came out yesterday. This is a gorgeous pick. Look at how that stock ran into the close. Please go back and watch my video because I told you specifically, do not carry this stock overnight. This is a nice day trading vehicle. This is not a good swing trading vehicle. I said that specifically. Well, why not? If it looks that good, why not hold it? Because that is a huge gap down. And I rarely like to trade stocks from the long side that are in the lower right-hand corner. And this serves as a perfect example of why we do not want to buy these stocks. This is bottom fishing. This is catching a falling knife. These stocks take a long time to form a nice base. And then you have a higher low double bottom, a nice little upward sloping trend line. You start attacking some of the major moving averages, some horizontal resistance. The reason I liked this stock yesterday was because it was starting to fill in some of this gap. But I had mentioned to you, take profits at the end of the day. You do not want to be around when the sellers come back, and they will come back, and they are back today. So I urged you, if you carried any of it overnight, make sure it's a tiny position. Netflix should have done really well. It's a tech stock. It should have done well given tech stocks overall, the overnight price action in QQQ. But you can see how it is weak relative to the market. If I were going to show you a bearish trade, yes, that certainly would qualify. So it's got some nice momentum. It is starting to sell off. So Netflix, we're done with that. Let's see what we can find on the bullish side. And I'm going to go into ATI and I'm going to start. This is in my bullish explosion alert. I'm going to expand this pane. That alert came out at 10:06. I had an alert on the SPY that came out at 10:06. So that was about 30 minutes after the open. And we'll take a look at ATI. We'll bring up that chart. So the alert came out right in here on that green candle. You can see how it's continued to move higher, move through the high of the day. It had earnings overnight. So on a daily chart, here's what I like about it. Downward sloping trend line, breach to the upside, through the 200-day moving average, through horizontal resistance at $20.50. And now you can see how it's continuing to power higher through the course of the day, of course, on heavy volume, because this is a earnings play right here. You can see how the stock has announced earnings. And that was before the open today. Very, very favorable reaction. I think this stock continues to go higher. So I like it on a daily basis. I like the fact that once it sets a trend, it tends to continue that trend. So nice orderly price action. Also longer term resistance that we've been able to break through. Lots of good characteristics in this stock on a longer term basis. So let's drill down and let's take a look at what the stock is doing on a shorter term basis. We have one OSI bullish. That means that the stock is strong relative to the market. And we'll be able to see that if we go in and put up the overlay for the S&P 500, we can see market is the gray line, down, 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 stock grinding higher, beautiful breakout. This is a really nice bullish stock. So this is going to be your bullish pick of the day. And right now we're going to take a look at what we got in the market. So we actually had a double bottom that formed. We have a bullish 10P cross that ended up being actually a nice one right in here. Right about there, downward sloping trend line, just getting breached to the upside in here. So it looks like we're going to be attacking that 100-day moving average on the S&P 500. Here's what I'd like to see it do. I'd like to go up and take this right out. That would tell me that we've spent most of the morning establishing a bid and finding support, and now we're ready to attack that 100-day moving average. If we're able to get it through it on the first attempt, we are going to continue to move higher today, and you can expect the QQQ to probably rally through the 200-day moving average. I am bullish. I like what the market's doing on a longer term basis. On a shorter term basis, we just have to wait to make sure that buyers are lined up again and that we're breaking through that high of the day, and then we should be able to see some nice follow through. My first target on the S&P 500 is that 50-day moving average. I think we'll be able to get through this 100-day very easily. In fact, we're trying to do it right now. So over the next couple of days, with Facebook and Amazon on deck, look for us to get up to that 50-day moving average on a swing basis. That's where I'm going to be taking some of my profits. Good luck with your trading. I hope you like this video format. Please post your comments. Incidentally, when you post a comment and you have something that you really liked in the video, put a timestamp in there, because when you put a timestamp in your comment, anyone that's reading the comment can click on it and it'll take them right to that exact moment in the video. Thanks so much. Good luck with your trading. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.